$60 billion into India in just last 6 months. That's nearly 6 lakh crore. And this money is not going into the technology, it is going into semiconductors, factories, data centers, and industrial infrastructure. Which means one thing. Global companies are no longer looking at India only as a market. They are starting to look at India as a manufacturing base. For almost 2 decades, the world depended heavily on one country for manufacturing, which is China. But supply chain disruptions, geopolitical tensions, and rising concentration risk changed that equation. And now, global capital is actively searching for alternatives. And India is suddenly entering that conversation at scale. US investments into India have risen from roughly $36 billion in 2013 to more than $81 billion in 2025. This is not an incremental growth, that is capital repositioning itself. And the data is now showing up everywhere. India's auto exports recently jumped nearly 38% year on year. Electronics manufacturing has already crossed $150 billion annually. Global hyperscalers are accelerating data center investments into India. Semiconductor projects worth billions of dollars are entering the country. And maybe the most important part, India and the United States are currently moving toward deeper trade integration with access into nearly a $30 trillion American economy. Yes, $30 trillion. Now here is what's interesting. Most people still think India's manufacturing story is 10 years away, but companies writing $60 billion checks clearly think that cycle has already started, because countries become economically powerful when the world starts depending on what they produce, not on what they consume. And maybe that real shift is happening right now. India is slowly moving away from being a consumption economy to being viewed as an industrial economy. And if that transition sustains for the next 1 decade, this could become one of the biggest wealth generation cycles India has ever seen.